Hi! Before we dive into what corporate bond funds are, let us first understand what a corporate bond is. Companies borrow money to fund their daily operations or for growth and expansion. They can borrow money in multiple ways, such as issue of shares or taking loans from banks. An easy method for companies to borrow money is through debt instruments called bonds and non-convertible debentures. Companies prefer raising funds through issue of bonds because they do not need to dilute their shareholding. Bank loans can be expensive for the company. So, as the name suggests, a corporate bond fund is a type of a mutual fund which invests in debt instruments such as bonds and debentures issued by other companies. As per SEBI, such funds are open-ended debt schemes which invest at least 80% of their corpus in the highly rated corporate bonds. A high rating is given only to companies that are financially strong and have a low chance of default. They are assessed by top rating agencies such as CRISIL. These funds are meant for short to medium-term investments with an investment horizon between 2 to 4 years. For the long term, these funds may become risky. Since corporate bond funds invest in high-rated companies, they are less risky compared to equity funds but fetch lower returns. Long-term capital gains tax is applicable on the profits if the fund is held for more than 3 years. If redeemed before 3 years, short-term capital gains tax would be applied as per the income tax slab applicable to the investor. In India, corporate bond funds are usually of two types. Type 1. These funds invest in the top-rated companies with high credibility. These may offer lesser returns but have very little risk. Type 2. These funds invest in slightly lower credit-rated companies. These offer higher returns and are also riskier in nature. So, as an investor, if you are looking for higher returns than a fixed deposit from a safe option, investing in a corporate bond fund is a good choice. But it is important to have a slight understanding of the companies and the type of bonds the fund invests in before investing. Thank you for watching the video.